it's a property-based NFT property-based sales system. And they already did a sale of a house via NFT for $175,000 last weekend. So holding the NFT gives you ownership of the house. A lot of questions come up, like, what happens if the wallet's hacked, et cetera, et cetera, et cetera. But
how about this one? Is it a security?
well, is a house a security? I don't know.
I think if you can
I don't know.
package up mortgages and stuff and bundle them and sell them, then I think, securitize it, then I'm going to say somebody's going to make that argument.
Yeah, I would agree with that. But I think just buying a house, from an NFT marketplace. Eamon said Roofstock did it. Yeah, it's Roofstock, a leading marketplace for buying and selling turnkey single-family rental investment properties. Oh, very interesting. So their focus is on selling properties that are rental investments. That's cool. That's very cool.
I think it's a pretty cool idea too. I wonder, look, we always want the ability to take that NFT now and go to somewhere and borrow on it, and then go be able to play and do whatever you got to do with that capital. That's what I want to see this get to. And I don't know if they're doing anything like that.
Eamon says they spin up an LLC for each house and hold that NFT in the LLC's wallet. So you're basically, I guess, buying out the LLC, and then you own the NFT. So you own the house. And I'm assuming then all the title, insurance, and everything else is done through the LLC. That makes sense.
And I guess these are not, they don't have mortgages on them because the primary lien recorded on the NFT.
I would assume that, you have to.
Might be a cash buys.
Yeah.
These might be cash buys. Yeah.
I don't know.
No, hey, great. I'm glad to see it. Look, this unlocks, cool. What is it? $30 trillion asset category in the US, Resi?
What I want to fucking get to is where in South Carolina is a 2.5, 3-bedroom, 1,500 square foot home only $175,000?
Yeah, it's a lot of, Carolinas, there's a lot of bargains out there.
Fuck.
But a lot of it, I don't know about that type of house, but I was driving around up like southern North Carolina, up through like Sanford and Southern Pines, up to Chapel Hill like a few months ago, and I was amazed that you had 30-acre lots with houses on them for like $225.
This is in Columbia, South Carolina.
Yeah, that's like the capital, I think. So, and that's where the University of South Carolina is. That's I have friends that live there. That's a real, it's like a little mini Charlotte, a little mini Atlanta. It's, like a Raleigh type place.
Yeah.
So cost of living's low, and it's a nice little town. Columbia is kind of like, Savannah, Charleston, those types of places.
Niblet says the LLC wrapper is also a way to avoid some land title transfer taxes where applicable. Oh, that makes sense. That makes a lot of sense. That's interesting. Huh. Well, this is cool. Look, and what I love is that people are getting creative about the model, right? They're trying to figure out the best way to do it. Ronora, by the way, said earlier, crypto earned through labor is unassailable. We should move away from pure finance into real production. Yeah, I think we're going to see more and more of crypto involved in actual production environments. But at the end of the day, production companies and manufacturing companies and product and services companies don't come about without financing. And so you've got to have the financial models behind them at some point to be able to fund them. So.
Yeah, because that's what makes the crypto have the value.
Exactly.
For the labor markets.
That's right.
But yeah, look, this is what I think the whole key is here. If you're in the US, the Philippines, or, Zanzibar, you can basically do things like this off your phone and other devices that start generating some cash flow or some value flow. Yeah. When you decide to sell it or not is up to you. And of course, the risk is that it can always go to zero. So I love this concept of putting money into, again, microfinance.
Yeah.
You don't need $50 billion in Zanzibar,
exactly,
to feed your family. You don't, it's like a tiny bit makes a huge impact. And that leverage is so key to like elevating half the world's population to a sustainable value proposition, I guess.
Yeah. There was financing on this. Teller Finance. Is Teller a DeFi protocol? I think it is.
There is TELLOR.
No, that's the guys I interviewed
last week. That's the only one I know.
Lending for fintechs. Oh, look at this. It is crypto based. So not only was it an NFT that was sold to buy the house, but there was actually financing via a finance partner. Now, I'm sure this was a bit of a publicity stunt, right? But it draws attention. We're talking about it, so I love it. Whoever's running
Look,
marketing and
it's good
PR
to
over
see
there.
it because the last thing we saw in the US that I recall was the one in Tampa, which was like that ranch going for like 800,000. And it
Yeah,
was one buyer and nobody knew who it was.
exactly.
So,
Now
you're like, really? Sounds like
this is
self-healing.
this is the way that you can start seeing a path to scaling,
Yeah.
right? This is like, okay, we're trying this, we're going to see how it works, we're going to see what problems we encounter. But if they're all new, somebody was asking earlier about what if there was a title issue in the old house, blah 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 blah. But if you do only new construction for this for now, then you can learn the lessons, gradually, and you don't fuck it all up at the beginning. So I think there's a real opportunity. This is really powerful. I want to take a look at Roofstock a little bit more.
Because look, now you could go and you can do a second mortgage on it for home improvement and you can fractionalize it, it sounds
Oh
like.
yeah,
So you
yeah,
could go out to the community and put it up on OpenSea and something like that equivalent,
yeah.
and be like selling 20%
That's
stake,
beautiful. That's beautiful.
and securing it with whatever the spread is between the first lien and the equity of the
I
house.
love that.
This
Yeah,
is the kind of stuff that's going to just put DeFi on,
well,
friggin'
and now
steroids.
do you build a marketplace around that? Like, so think about this. When Ronora was talking about real world production, so here's the deal: you want to improve the house to improve its value, right? So there's a marketplace, a DeFi based marketplace of contractors, architects, etc., that will design out the work, get it set up, and then in that marketplace, you can sell that fractionalized portion of your home for 20%. And then somebody owns that piece of the home in an NFT. Then they get the return on this when it gets sold eventually.
Yeah.
That's
Well,
that's got some real potential.
even think about this, Brad. So you know how when you're walking around and like it's in the Grove, they got the real anywhere you go to a town where people come to retire, I guess, or vacation, you got these real estate offices. They got to pick all the little
Yeah,
papers up in the
pictures.
window. Well, what if you walked up to the window and you saw this listing, say, and it had a QR code, and you
Yep.
would scan it with your phone, and boom, you're instantly into OpenSea, let's say,
Yep.
and you were making putting in a bid for the property or something,
Yeah.
or you were buying a chunk of a rental property, where okay, I want to take 10% of that slice because I think rents are going up in Manhattan for the next year or so. And you're doing it all on your phone, and you're
Yep.
doing it right there. I mean, look, real estate, it doesn't like cycle fast. It's like slow as anything. And if we
Uh-huh.
get it up to crypto speed,
Ooh, that'd be awesome. Well,
$30
and
trillion turns
here's
into
the thing.
100 trillion real quick.
And that idea that you just have, somebody sets up, this company Roofstock sets up, maybe they do this already. Maybe this is how Roofstock works, but what if they provide property management, right? So
Everything.
now you could own this with 20 other people, and you get your monthly cut of the rent that's coming in, the profit coming back in, and you don't do anything but go in and buy a fraction of an NFT. I mean, there's no investment group to set up. There's nothing. You're just picking the ones you like. You're one of 20 people that bought a piece of it, or 50 or 100
Mhm.
people or whatever. You build a nice portfolio up of all these rental properties, and a company's taking their cut for managing it and building it.
So look, when you think about like Dennis or Max Life's ideas around
Yeah.
real estate, this is a cool way to get it done. Let's think
Yeah.
about Airbnb type stuff too.
Oh yeah, absolutely.
Where you acquire a portfolio of 20 Airbnb properties that are renting, and you've got like return numbers on each property on the NFT. You've got basically, what it costs to buy a slice of it. And people could come in and now all of a sudden go, oh yeah, these guys must be doing something right. They got whatever high occupancy, and the ROI or ROE on the property is, 14% or something. I want to get a slice of that one. And so now all of a sudden you can basically fractionalize pools of real estate to different investors that come in based
Yep.
upon how you manage that property.
Oh, that's
So
good.
this
Well,
is kind of ties to a lot of cool stuff.
and now
This
wait,
application.
you had a great idea. Now you have a marketplace not only of rental properties and Airbnb properties and whatever else properties, commercial properties. Now I, as an investor, could go in and buy, several pieces together and have an index that I built myself of all these different kinds of properties. And I could turn around and sell that as one whole thing, an
Yeah.
NFT that contains all of them, or sell off pieces of them when I want to. You could be a borrowing market against it. So you can go in and buy more right? And that's based on the value. So, it's just like anything else that you're borrowing against. There's all kinds of potential here.
You could,
Here's the other thing. You want to get involved in real estate, but you don't have $175,000.
yeah.
You got $1,000, right? So you go in and buy the first piece of house, and then you take the savings from that, or you borrow against it and buy the next piece of a house. I'm getting really,
Well, look,
I'm getting hot and bothered. Let's go back
well,
to
look,
that
we were
Comex
talking.
story.
Yeah, no, look, because also you can then go back to Teller, the finance groups, and you can pledge your NFT of your house to say Teller and get maybe 4 or 5%, whatever below the mortgage rate, and then they're relending that out to finance mortgages. But importantly, 2005, I was working with some guys, the realestate.com original team, and about doing this with office buildings. But this is before crypto. So we were talking about, fractionalized stock shares or something like that. But it was all about that whole point of, the Chrysler building in New York, let's say. I don't know what it's worth. Let's just say it's worth $1 billion. You can't get in those deals. I can't get in those deals. It's like you got to be swinging huge amounts of money and know the people.
Right.
But what if they laid off like 20% of the Chrysler building into an NFT and allowed people to come in and buy shares of, whatever the return is on the building? Then you can come in with $5 and buy a piece of the Chrysler building. I mean, that's what I see with crypto and everything, and this decentralization of capital. This is the one of the key sectors that has to be unlocked.
Yeah, this is brilliant, man.
So
I'm really getting hot and bothered. Eamon says, giving away my idea for what I want to do with one of my properties. But Niblets says this, and I'm so glad you asked this question. I'll tell you, Niblets, it's called the blockchain. No, I'm sorry. I don't mean to be, I don't want to sound
facetious.
Niblet says, how do you avoid this becoming like 2008 CDOs? Well, here's the cool thing. Everything we'll know where the market stands, right? We'll know that it's not fake paper or fake debt. Now, there could be financing organizations that just want to fucking take the money, but we'll be able to see that. We'll have all the data. We'll have all the numbers, right? Whereas with CDOs, we didn't know everything that was going on behind the scenes. We didn't have the details of how leveraged everything fucking was. And we didn't have and we probably won't have a single point of failure. The single point of failure, well, I shouldn't say single point of failure, but all it took was 1 or 2 banks to fuck it up and die that caused the cascade, right? Yeah. Whereas in this case, it's a risk, but I think it's a less of a risk.
Yeah, I mean, the key, having looked at that crisis a lot, the key thing I saw there was that when they were bundling, aside from the fact that everybody was getting mortgages who really shouldn't be qualifying for them, and I'm not saying in a negative way. I'm just saying in that
they weren't qualified.
Yeah,
absolutely not, dude. Those mortgages were a joke.
Yeah. So what happened though is that, look, you would bundle up when you securitize mortgages. You're trying to do a blend of A paper with some subprime paper. So the typical one would be like 90% A+ paper. That's the highest, most credit qualified people. And subprime is like, regular people, but just not people with a lot of, big paycheck type jobs. And then of course, a lot of people that are reaching or stretching. Well, it was S&P or Moody's. I think Moody's, one of those guys, somebody came up with the idea of like, hey, let's take these A paper rated securities, let's strip out the 10% that's subprime, and let's make 10 of those strips into one security. So all subprime, but we could still call it A paper. So then, you look at Moody's, S&P, that's where this happened. So then now it's open season for the banks to sell the shittiest stuff for the highest price. So they securitize and bundle, and no blockchain, of course, so nobody can find paperwork on any of these loans. A whole bunch of it ended up in Iceland somehow via London. So there was always somebody that got suckered to take the big weight of it. So in this case, I see NFTs on blockchain. When you're bundling or securitizing them, you're going to have transparency into the rating on each of the underlying mortgages.
Yep.
And how they qualified. So I think it's less likely to happen. But at the same time,
still
when
possible.
Stuff starts going fast, we got to start paying attention.
Still possible, but if you're smart, right? If you're building these platforms that are facilitating this shit, you build in a mechanism from the beginning for tracking it. Because look, at the end of the day, just like the banks, it wasn't in their best interest for the whole thing to fucking collapse ultimately, right? They were short-term thinking. Well, the same's going to be true for these platforms. They want long-term, high revenue, token valuation high. And so if you're smart, you sell yourself as the anti 2008, right?
Yeah.
We're the platform that actually builds in the safety checks, monitors where the debt is, monitors the ratings on this debt, et cetera, et cetera, et cetera, so that everyone knows what's going on at all times. Like, make it all about the transparency, build it and become the biggest, because then the people investing are going to feel a fuck of a lot safer buying securitized mortgages, buying houses, buying whatever, because they'll know that we're not on the edge, right?
Yeah.
And that I think that's the
And
value
watch
of it.
all the LTV percentages and watch the down payment requirements.